This is Bazaar Morning Call, broadcasting live from the CNBC TV 18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on another fresh new edition of Bazaar Morning Call. It's the start of a new week. Monday morning, we are coming to you from the CNBC TV 18 Motilal Oswal studios. I'm Prashant. With me, my colleagues Sonia and Nigel. Good morning, guys.
Hi, good morning. Morning, Nigel. Well, looks like the market is on the cusp of some sort of a decisive breakout on the upside. And all the ingredients are perhaps in place?
Well, indeed, smelling fresh all-time high. So let's see whether or not this is the week, right? We've been long waiting for it.
You know, on Friday, I was thinking you were on Editors Roundtable, you were talking about IPL. Which team are you supporting?
Yeah.
What happened to that?
Mumbai Indians didn't make it.
I think the tournament just did not want to get over, right? I mean, so one more day.
One more day, this evening.
We will find out who the winner there is. But as you guys have been saying, there is unfinished business, right, on the upside. And, you know, the market gave us a taste of that on Friday, and I think that's where we need to begin. By the way, Friday was a very strong session, but over the weekend is when we got the real news. An in-principle deal to solve the debt ceiling crisis has been reached between the Republicans and the White House, the administration, basically. Now, this is an in-principle deal. We have the rough contours of what has been agreed upon. I mean, non-defense spending, for example, will stay at these levels. The entire thing is now being pushed to 2025, beyond, you know, the next elections. And this is going to be a very good news if this gets passed. And that is what markets are waiting and watching out for. You know, so the expectation is that the U.S. Congress will vote on this deal on Wednesday, this Wednesday. Now, the reason why this is important is because, you know, the House is controlled by the Republicans, the Senate is controlled by the Democrats, and both need to agree, both need to sign this off. This is an agreement between the House leader and the president, but the parliament needs to approve in the U.S., and that's basically the reason why markets are still tentative. I mean, actually, you know, U.S. futures are higher, but there's nothing, I mean, it's not a ripper of a rally or anything. Asian markets, the last I checked, were a little mixed, a little higher, a little lower, but all over the place. So this needs to go through, and I think then we perhaps start to get a real kind of reaction. Now, the market here, as I said, saw follow-on buying on Friday, follow-on from the previous session. The Nifty ended about 1% higher. We come to levels then. Watch for a close above 18,565. I mean, a close higher perhaps takes you one step closer to the all-time high of 18,887. Actually, I mean, I'm nitpicking. You've got not very much distance between where we left off on Friday and the all-time high. If you're trading, these levels are important. So 18,565 becomes important. On the way down, the 20-day moving average, the evergreen sort of level there, that comes into play. We've put a fair bit of distance, 250-point distance between where the 20 now is and where the closing on Friday was. That stands at 18,252. Twice in the last 2.5 weeks, the Nifty is bounced in a very clean, powerful way off that level. So that is the support on the way down. On the Bank Nifty, watch for a close above the 44,151 level, which is, of course, the all-time high. And then, I mean, if you're able to do that, you know, you basically target 44,800 kind of levels. You'll project extension levels higher than above the previous all-time high, but we'll talk about that when we get to it. On the Bank Nifty, we're about 150 points away from Friday's close to that new all-time high. On the way down, the 20-day moving average for the Bank Nifty stands at 43,597, which should not be broken in any reversals, etc. But, I mean, you know, U.S. markets up about 1.5%, 2%. NASDAQ, for example, on Friday was up 2%. And then over the weekend, we got this debt deal, etc. So, I mean, maybe U.S. futures, when you look at it, perhaps they're not doing very much also because you got a fair bit of action, which was priced in expectations of something happening over the weekend on Friday itself. But SGX up on your screen, we're up about 0.8%, 162 points higher. We'll see if these gains hold all the way to market opening by 9:15 or we pair some of this off. Sonia.
Oh, absolutely. I mean, the energy is palpable, right? The SGX Nifty is indicating a big bang opening this morning. And as you said, I mean, this is, of course, a market that has been building on to its gains. And now we've reached a stage where the Nifty is at the cusp of breaking above the trading range. We almost closed at that 18,400 level on Friday. And there are a lot of indicators that the market could perhaps not just break out of the range, but sustain over there. Remember, the Nifty is now less than 400 points away from an all-time high of 18,887. So the momentum is intact. In the last 1 month alone, the Nifty has gained about 2% and a lot of the pieces of the puzzle are now fitting in. So once again, foreign and domestic investors have bought in the cash markets. In fact, on Friday, you saw FIs buy about 350 crores, DIs buy almost to the tune of 1,900 crores. And global markets have been very upbeat. In fact, as we speak, markets like the Nikkei are up almost 500 points. This is after there is some degree of certainty on the debt ceiling issue being resolved. And that has given, a new set of wings, a fresh set of wings to global markets. Nasdaq, in fact, has ended the week with the 5th straight week of gains last week. So things have been pretty good over there. In our own markets, it is the last leg of the earnings season. So a couple of data points. ONGC's numbers were on the weaker side. Aurobindo Pharma saw profits fall about 8% or so. ICICI Lombard will be in focus as ICICI Bank will be hiking its stake in the company to over 50% before the month of September. So a lot of individual stocks in focus. But I think today, all the limelight is going to be stolen by the headline index and big bang opening from the SGX Nifty. But important to see if that sustains because, this is a market that has already seen buy on dips and building on to its gains. Perhaps a lot of the easy money has already been made.
Well, that's right. Sonia, you couldn't ask for a better close to the week and couldn't ask for a better start to a new series. We had a solid close on Friday's trading session, both on the Nifty and towards the end of the trading session, the Nifty Bank as well that did participate. As we have been saying, the Nifty is within kissing distance now of fresh all-time highs. But there's no change in trend. But given that the SGX Nifty is suggesting such a big gap up, maybe taking some money off the table would not be such a bad idea for a day trade. If you had a long position, taking some money off the table on the index itself will not be such a bad idea. Let's run you through a couple of cues. Institutional flows, well, the FIs, they've sold just once in the last 22 sessions or in the last 1 month or so. So that's telling you the kind of flows we've seen from the FIs. The DI flows, well, that was heartening in Friday's trading session. They pumped in 1,850 crores odd. That's the best we have seen in FY24 so far. So the DIs were the reason that, in fact, we saw those big institutional buy number in Friday's trading session. What did the FIs do in the FNO market? Well, they added long positions. They continue to remain net long on the index. On the option side, well, they wrote more puts than calls. More than 2.5 lakh puts is what they wrote. And two strikes were very active, 18,400, 18,500 put. Between them, there was more than 1.1 crore shares that were added. So that's telling you there is a fair bit of writing. The support now going by the options data, given that 18,400 put was active, premium at around 50 rupees, 18,350, 18,410, 420 odd becomes that important support zone for the bulls to hold on. But will it be a good idea to take some money off the table? I think maybe yes. And I'll tell you why. Three broad reasons that I'm putting up. The PCR has moved to the upper end of the band. It's moved to around 1.37 or thereabouts. Normally, when it goes to around this 1.4, we see a temporary pullback. So that's point number one. Second factor is the dollar index continues to remain elevated at around 104.2. And the third factor is, I was looking at the probability of Fed hikes, and there's a Fed tracker out there. Earlier, it was in mid-teens, whether or not, the past week that is, whether we get a 25 basis point rate hike or not. That doubled to around 35%, and now the probability of a rate hike coming from the Fed has moved to around 70%. So, that earlier we were factoring in that maybe we'll see a pause. Now the probability is higher that you see a rate hike. The SGX Nifty suggesting a gap up. There's no change in trend. You can continue to remain long, but if you get this sort of a gap up, maybe taking some money off the table on the index could be a good strategy. Prashant.
Well, Nigel, you're absolutely right. I mean, expectations of rate hikes have been being consistently priced back in, and it's been quite incredible.
Yeah, I think it was 17% the previous week. It moved to around 35% on Wednesday, Thursday, and now it's at around 70%, the probability of it going up. So
it's been consistent. For the last year, we get markets get all excited that rate hikes are done, rate cuts are coming, and then you start to slowly price those hikes back in, and that's happened this time around as well. Before we get any further, let's quickly tell you what's lined up in the first half hour of the day. We have the global setup with Ed Yardini of Yardini Research in just a bit as that conversation comes up. Then we'll, of course, focus on the top 10 stocks to watch with our research team. And our market guest today is Prakash Devan, who will weigh in on some of the results which we have gotten over the weekend. Stay with us.
Okay, let's kickstart the show. Then we have a lot of opinion coming through for you in the next 2.5 hours. And we kick it off with Gautam Dugar of Motilal Oswal Financial Services, who expects the markets to be range-bound with a positive bias. He says the Nifty is likely to break out of the 18,500 resistance zone. Earnings season ended largely in line with expectations led by the BFSI and the auto segment. They like financials, large-cap tech stocks and select real estate names, while they continue to be bullish on names like ITC and M&M post-earnings.
Well, let's get you some money market views as well. So on the rupee, B. Prasanna of ICICI Bank says US dollar remained on strong footing as hotter than expected inflation and jobs data repriced the terminal rate and pushed up the front end of the yield curve. Risk sentiment improved on expectations of a deal regarding the debt ceiling early this week. In Asia, while the Chinese yuan depreciation pressured the currencies, rupee was supported by RBI intervention. The rupee, backed by better macro fundamentals and inflows, will continue to outperform its peers in the medium term. This week, Prasanna expects the rupee to trade between 82.2 to 82.9 to a dollar range, with RBI smoothing out the volatility.
All right, and on the bonds, V. Prasanna of ICICI Bank says globally yields continue to harden as uncertainty loomed around the debt ceiling hike and stronger economic prints, leading to increasing expectations of one more hike by the Federal Reserve. Domestic bonds remain supported owing to strong real money demand and expectations of inflation undershooting RBI's projection. He expects bonds to remain range-bound with the Indian 10-year benchmark to trade within a 6.9 to 7.05 range.
Well, we have a lot of news flow over the weekend, both results and some stock-specific action as well. So let's run you through the list before we get to our special top 10 segment. We're looking at Auto Pharma, ICICI Lombard and PFC. There's stocks on the back of positive news flow, while on the flip side, you have ONGC, Sun Pharma, BHEL, Karnataka Bank, City Union Bank, TCI Express and Sundaram Finance that could be reacting to negative news flow.